Hey guys, so today is a no news Monday, the day before CPI. Still, actually, yeah, quite clean trading day. We will go into, yeah, today's trade breakdown. Basically, I took 3 trades actually today, with the setup right here and 1 trade right here. Basically, only the 10 a.m. macro, which delivered actually quite clean today. Really small win today. But yeah, I think there's still something we could have done differently or something I learned today. But today is a quite interesting day. Why? Because we opened up with a new open range again. No, with a new week opening gap. So new day and a week opening gap because we have Monday. And as you see, we opened up right here, and from then only traded higher because we have also relatively daily highs right in advance basically. To target. And if we drop to an hourly chart, it's also quite clean. Why? Because we opened up right here, trade lower, took out this as a liquidity right here. To me, we are then only trading higher from here. I don't want to look for shorts in here because to me a market maker buy model is in play, and we have such a strong high time frame objective with the daily highs right here. So therefore, I think we can also drop to a 50-minute chart. It's really important that we do not try to really force any shorts in here. I mean, there's just way too much high resistance for shorts. It's obvious that we are going to trade higher. We are expecting definitely bullish right here as well. So we closed above CE, then really had a short-term retracement with 930, and from then we wanted to see that we accelerate higher. Why? Because we had also our London lows already scrapped. Market maker buy model is in play, only barely traded below midnight opening price, so that's really bullish. And also if we take a look on regular trading hours, it's also really clean aligned with regular trading hours. So why? That's basically really confirming my bullish bias. Why? Because we have a new open range gap of 70, no, a bit less, of 80 handles. Therefore, we are below 120, and I want to see that we reach back to CE of today's new open range gap. We also took out regular trading hours as liquidity, and from there right here trading lower. That's only manipulation. Basically, manipulation lower. We want to look for shorts. Respected the level right here. I don't know if it's a close or a open, a high or a low of a new open range gap, a previous gap definitely. But yeah, it's not really important to us. It's just how we react to the levels, and from there we really traded higher completely. And he was a rocket today. I don't know what really caused this, but yeah, really aggressive, really higher. And then before we go to the next setup, I want to talk about the first long basically. I think the long right here is valid, but it failed because we just did way too I think, I don't know. I mean, we did damage to the sell liquidity right here. We traded into the higher time frame, and from there on, I think it's possible that we expand higher. And I think you cannot really wait too long. I mean, what happened right here, you cannot really always wait for the perfect fair value gap or inversion fair value gap to get respected, because then you most of the time miss out, especially in those aggressive continuation trades like today, where we just expect basically a retracement into a 5-minute gap right here, respecting CE right here as well of the high time frame gap, and from there we want to trade higher. And I think what I could have done differently is just be a bit more patient. Why? Because SMT was not in play. I think the damage to the sell side was just not enough in that case. And it's also not really a really clear CSD. I mean, we had 3 consecutive up close candles. We closed also above the order block right here, so the down close candle right here. And I think it's a bit valid, but we could have been a bit more patient. Still, I mean, the loss, it's still aligned with my trading approach. Then we created lots of SMT in here, already went long in here. And I think once again, I mean, yeah, I was maybe a bit too early on pressing the buy button, but I mean, right here you have to be quick. I mean, from there on we instantly rallied 100 handles within like 2 minutes. So right here we cannot wait for a CSD. I mean, it's everything already. Everything is already aligned. We have SMT being in play. We basically are trading now within the 5-minute fair gap. So that's our condition. We want to see that we respect that. Therefore, we need to trade higher from here. We are also approaching now our 10 macro. So yeah, once again, I think completely valid entry. Yeah, probably with being a bit more patient right here, with not just being a bit more patient because we are just this early, and this loss maybe could have been avoided. I mean, and also right here, but yeah, I think it's completely valid. So what I did today was I traded first 10 contracts right here, 10 contracts right here, and then because of 2 losses, only half risk, so 500 contracts right here. Yeah, closed most of my position relatively right here. My last contract right here, not perfect, but was also not really easy to manage with such high volume. I was expecting that we would trade back to the opening of our today's new week opening gap, but I also did not want it to yeah, really get, I don't know. I think the last contract could have been with a wider stop, but yeah, I'm also content with closing right here because with that I'm break even on the day. Therefore, I think it's valid. If I would have not taken the first loss and I'm up right here, I would not have traded. I would have closed my charts. In that case, because I'm break even and because we have, I think in that case also a really clean setup, I'm able to take one more trade, shorted right here, took one partial right here, got stopped. So only really small win, as I said before. What I could have done differently is, once again, I basically wanted too much. I mean, already right here we have almost 50 handles. Trading 5 contracts, I think that's definitely enough. So $500 in that case, completely enough. Also because we are trading into the inversion gap right here, would have really wanted to see that we kind of just dump to the downside, because we also close below CE. I think in that case it looks really bearish, and I think there was not really a strong indication that we are going to reverse from here. I mean, we closed below CE, we had no SMT being in play actually as well, and we are not really in a significant time window. So I really would have wanted to see that we trade back to the 930 opening price. Would have been a really clean price run. I mean, that we are going to consolidate and not completely trade to the downside was to be expected, but I think a bit more deeper retracement could have been expected. So yeah, for example, the lower quadrant would have been quite nice, but I mean, I'm content with the trade right here, especially with the setup. But I think once again, money management could have been dealt a bit differently. Why I really like the trade is the fact that we have SMT being in play, but also the higher time frame in that case is really important. So what we traded is still within the 10 a.m. macro, and in that case we traded a huge wick to the downside. And why I like this trade is due to the fact that we scrapped basically the 9 a.m. buy sell liquidity, and also, as you now saw before, we already traded back to today's new open range gap, so we can expect some kind of higher time frame resistance in here. I don't know how to call it, but it's definitely an important level. SMT is really clean. Also, yeah, the inversion fair gap, which took out the buy sell liquidity right here, and also more importantly the one right here. Why? Because we traded above the high right here, and in that case also closed above with the body, so that's even more important than inversion fair gap. And yeah, really clearly displaced through it, and that's what we want to see if we are bearish. And in that case, to me, it was really a clean trade actually. And also, if we take once more a look to regular trading hours, what I also really like is how we already closed above the new open range gap level. So in that case, I do not expect any movement higher. So right here, the bodies fail to close in basically today's open range gap, but with that we now traded above it, and therefore you can expect a really short-term retracement. I thought it would be a bit deeper retracement, as I mentioned before, but I mean, could have also be expected because we reached CE right here. But yeah, I think that's it. So definitely not the easiest conditions to trade. I'm content with the how you call it, continuation setup right here. Could have been a bit more patient, but definitely right money management. Could have held a one last contract basically for the new open range gap high, no, weak opening gap high, sorry, and just with a wider stop. But I mean, I'm content with also being break even right here. And once again, right here, I could have aimed for way more low-hanging fruits, basically, with which are the inversion gap right here, and also today's upper quadrant level of today's new open range gap. So yeah, I think that's it. So yeah, not really a huge winning day. Definitely could have done something differently, but it's also not really easy to trade. So once again, I think also maybe due to the fact that we have a no news Monday, tomorrow is PPI, I think high impact news. Definitely, I don't know if it's PPI, but yeah, that's basically it. Hope you learned something new, and yeah, see you soon.